Welcome back. We're hearing from Jim Chanos even more on the MicroStrategy trade that he is bearish on, and this as Bitcoin has now the support level of $100,000 is being tested. And not just being tested, but really being tested as what I believe we are entering is the corrective phase of the crypto market. Now, this doesn't mean that we're not going higher, but as you guys can see, we are retesting the levels that we had right after the election during the Trump pump over here. And we had a nice corrective phase at the beginning of 2025. Now we've reclaimed those highs and potentially are revisiting the corrective phase of the Bitcoin market now that we're in the 12 to 18 month time frame after the Bitcoin halving. Remember, guys, there's a lot of people out here saying that the 4-year cycle is dead, that we need to remember that Bitcoin's never going to have a bear market again because the likes of MicroStrategy keep buying more and more. But we're seeing some potential changes going on here in the market with even MicroStrategy slowing down their purchases from hundreds of millions of dollars to just $26 million worth of purchases now at the end of June of 2025. And so let's kind of break down where we are in the cycle, where we are going. Is this just a corrective phase, or is this the beginning stages of the bear market? A lot of people don't want to believe that that we're here, that the bear market is coming. But either way, it is going to come, and we are going to see a bear market at some point. And so let's kind of discuss, and we're going to go through all of the metrics. We're going to go through the data. I'm going to show you even more indicators that we are probably at the top of the market, because guys, we went below $100,000 and we're back above 100,000, but the market doesn't seem to be holding steady at this point, right? All the bullishness that we had towards the beginning of the year into the middle of the year, we're still using the same narrative to keep the markets elevated, and that is not going to work. So let's get into it. Don't forget to give this video a free thumbs up. Also hit the subscribe button. We upload every single day to bring you the latest happening in the financial world. Thumbs up are free, but crypto is not. So give the video a free thumbs up, and let's get into it, starting right here with Arthur Hayes. Now, you guys know Arthur Hayes, well-known trader and formerly the founder of BitMEX. He said, "Did you hear that? It's the sound of money printers revving up to do their patriotic duty. This weakness shall pass, and Bitcoin will leave no doubt as to its safe haven status." And this is what Arthur Hayes posted right after Bitcoin went below the $100,000 mark. But this is a real big psychological level for the markets, this $100,000 level. Because, guys, there has been literally billions and billions and billions of dollars over the last year and a half, 2 years that has been entering the Bitcoin markets. And it's not, some of those are just purchases, right? They just made a purchase. But then the likes of MicroStrategy and even the Bitcoin ETFs, they are buying for the most part Bitcoin, and they have been buying. And the price has barely made it above $100,000, right? We went to 112,000 twice, or actually 4 times based on this chart. But we haven't been able to maintain or go even higher than that. And so that means that the baseline purchases that we are seeing from MicroStrategy, from the Bitcoin ETFs, et cetera, that this is the new baseline for where we are in the markets, meaning to go much higher or even double, we need even more purchasing going on. And there's a lot of people that say, but Cryptoviser, there's a limited supply. Yes, technically that is true. But what MicroStrategy is trying to do is they're trying to purchase at least how many Bitcoin are being mined every single week. That way, the new coins that would have been, inflating the supply would be going to MicroStrategy, and they wouldn't go into the supply. But that means that they're not, purchasing these on the open market. At the end of the day, I don't know that we are going to see the catalyst to drive us to $200,000, because while everybody is focused on $200,000, $300,000, $400,000 Bitcoin, they're missing the point that literally the exit liquidity has been entering the market for the last couple of years. And so we are back over 100,000 when I'm recording this video. I don't know where it's going to be when you're watching the video, because obviously the markets move very rapidly, but there is a lot of uncertainty. And yes, the Federal Reserve will start printing, but I don't know about just yet, right? We're still waiting on the debt ceiling situation to be resolved. We're still waiting on the budget to be resolved. We're still waiting on this whole conflict in the Middle East to hopefully resolve. But I don't know that we're going to see that happening in the immediate term. And I think that a lot of people are looking at all of these indicators, all of these potential downside risks, just based on fear alone. And they're putting it on the side and saying, nah, Cryptoviser, it's not that big of a deal. And it's like, the US is, essentially, in conflict with another country in the Middle East that is going to escalate. The more one side does something to the other side's going to do something back, and then the other side's going to do something back. And before you know it, we're going to be a few years down the road, and this thing is just going to be way more escalated than it is today. And what you can see here is that the fear and greed index is now moving towards fear. And just last week, literally 1 week ago, guys, 1 week ago, we were in extreme greed. And so you see how fast and how rapidly these things can move. But I don't think that we're going to get into extreme fear until we go much, much, much lower. And so how are we going to get there, right? Well, first of all, we're already going into the fear side, and Bitcoin is still above $100,000, but it dipped below. Once it stays below for a few days, then people are going to start getting nervous. And then if we go even lower than 95,000, 93,000, if we go lower than that, it's going to cause a lot of fear. But I don't even think that's peak fear, to be honest with you guys. I think we're going down much, much lower, like 50% reduction in the price of Bitcoin, bringing us to $50,000. And a lot of people are like, oh no, Cryptoviser, that's not going to happen. It's like, wait, so you think that we are going to double in price easily with just based on the baseline that we have currently, but we're not, there's no possibility that we're going to drop by 50%, but we can pump by 100%? That makes no sense. Bitcoin briefly sunk below 99,000 as US strikes trigger crypto market sell-off. We have to keep an eye on this because although crypto is viewed as a safe haven asset, if the stock market is crashing or dropping very, very rapidly, people and companies and hedge funds, they're going to get margin called. And so then what they're going to do is they're going to sell some of their riskier assets. And because Bitcoin is literally at all-time record highs, they're probably going to sell Bitcoin to make those margin calls to prevent liquidations in other areas of their account. And this can cause, even temporarily, a major drop in the price of Bitcoin. But there's other indicators as well. Now, some of you guys know Pentoshi has about 900,000 followers on X. And literally, by the way, I just want to show you a few things before we get there. One, if you really look at this chart here, you can see that we have a double top at the beginning of the year. We came down and we basically are back at that top level. Now, it is higher than our previous high, but there wasn't much support once we kind of got to this all-time record high level. And to me, this looks like a quadruple top, 4 tops here. And that doesn't look good. And to me, if this is a downward move, this is basically a gap of air back down to $19,000 potentially. And this can cause great buying opportunities, but we have to understand what else is going on, right? The market sentiment, the fear and greed index. So Pentoshi said at $98,000, this is his buy order. He said, I bought 25 Bitcoin to start to scale in. Spot, of course, meaning not leveraged. But I think the biggest area I want to buy is around 94,000 if given, where I would go pretty heavy, I think, in the next few years. We are going much, much higher regardless. Short term, it's hard to say. The chart looks not ideal. He said, I see that the area as a current value, however. Of course, I was hoping for us to get to $120,000 at the recent highs. It just didn't happen. We don't always get what we want. And that's true. What do I always tell you guys on this channel? Like we have to trade the market in front of us, not the market that we want, because we may never get the market that we want. There's a lot of people out here saying, but Cryptoviser, how can we go into a bear market when we haven't even had alt season? Well, there's nothing in the worlds, in the Ten Commandments or the Bible that says that God is going to force an altcoin season every single cycle. Like there's no guarantee in any of this. There's no guarantee that Bitcoin's going to go higher. There's no guarantee that Bitcoin's going to go lower. There's no guarantee that your coin is going to pump. There's no guarantee that any other ecosystem is going to succeed. We don't know what the future holds. I tell this to my viewers on the channel all the time, and we still get comments. But Cryptoviser, we can't be at the bottom. We can't be going lower because we haven't had alt season. It's like, why do you think that we are owed alt season? We're not. And so Bitcoin going to $100,000, and I've told my viewers this before, $100,000 versus $120,000 is really not that big of a difference. 20% move in Bitcoin, which is highly risky. You can get a 20% move in a stock and it's less risky. Go look at Tesla. While there's issues potentially with Tesla, there's been major sell-off over the last couple of months in Tesla. So, Tesla moving higher 20%, I would say is probably more likely than Bitcoin just going from $100,000 to $120,000, at least from an investment perspective, right? Because this idea that we went from 110,000 down to 100,000 and now you're going to start scaling in like we've hit the bottom of the market. This is an indicator we haven't hit the bottom of the market, because literally from all-time record high, $112,000, 112,000 till 98,000. That's about a 15% drop in the price from all-time record highs. That's when you're going to start scaling in? That doesn't make any sense. It doesn't make any sense. I would wait until we go much lower. And we are going to go much lower based on the fear and greed index, based on the 4-year market cycle, based on all the over leverage in the market, based on, people putting all their money back into the scaling into the market. Like, we haven't even exited the bull market. You don't scale into an asset as you're rotating out of a bull market. That doesn't make any sense. And so when I see indicators like this, although Pentoshi followed up and said this is very risky of a trade, and he has a much longer time horizon, it is something to think about. He's expecting 120,000. We didn't hit there. We're going down, and he buys at 98,000 instead of waiting a little bit, right? And a lot of people fall into this bull trap as we're rotating into a bear market. We've discussed this. We've talked about this. I told you guys in the last cycle, a lot of people on my channel, as we were rotating into the bear market, and I told my viewers we are rotating into a bear market, they said, no, this is the dip to buy. This is the dip to buy. They all got wiped out because those dips just kept dipping and dipping and dipping. Well, Mr. Wall Street on X, I showed you guys the other day, right before this major drop in the market, he sold his entire crypto portfolio, everything, completely liquidated it, and started shorting the market at $108,000. And he was right. He was right. And you know how you knew he was right? Because of the comments. You're an idiot. We're going higher. There's no way we topped out. All of this confidence that we were not at the top of the market, that we were not going to correct. And like I say, once you get into the euphoria mode or the final stages of the bull market, you know that you're in those final stages because of how blindly bullish people are about where the market is. They can't even see that we are, after a bull market, you're going to be in a bear market. After a major pump, you're going to probably have a major dump, right? The idea that we're not going to see this is pretty unbelievable, but a lot of people are ignoring these signals. Many of you are not. Many of you are taking action in your portfolios. You're looking at all this information and saying, yep, that makes sense, that doesn't make sense. There's a lot of bot farms out here on YouTube, on social media, that are trying to convince everybody else, don't sell your coin. We're not at the top of the market yet. We're not at the top of the market. Because here's the deal. Once people start realizing that we are at the top of the market and that we are rotating into a bear market, people start selling. And the more people that realize this, the more selling, the more accelerated selling. And eventually the price starts moving down, and then you get those big whales that are waiting for these pico tops, right? The massive euphoria. They're waiting to just exit, and they can't exit. So they hire bot farms to convince everybody that we're not in a bear market. And I'm here to tell you, we're not in a bear market just yet, but we are due for one, and we are definitely going to see one at some point in the future. Anyway, Mr. Wall Street said, at the start of last week, I gave a call to exit all markets and short Bitcoin at $108,500. I told you that the conflict in the Middle East would escalate heavily with the US entering. And indeed, he said he was fully right. During the night, we had the first wave of military action by the U.S., and all those who followed his calls are now sitting in cash and big profits on those short positions. During the week, they also had the Federal Reserve meeting announcing no rate cuts. Mr. Wall Street says this means the bull run will end in 3 to 6 months from now, and we will have the first very heavy correction in 3 to 6 months. Well. Now, keep in mind, this is just a prediction. It may not be accurate, but I have been explaining. We are in the 12 to 18 month time frame after the Bitcoin halving. I didn't pull the Bitcoin halving tracker up on this, but you guys know where we are. The Bitcoin halving was in April of 2024. We're now in the middle of the summer 2025. So we are in the end stages, and we literally have about 3 months left, about 100 days, maybe a little bit less, until that 18-month time frame after the Bitcoin halving hits, which historically marks the end of the bull market. I'm not the one who says this. This is based on the data. This is based on the halving tracker. This is based on historical context, right? So it's not my opinion. This is data. And so, are we going to see that again? Potentially. I'm more on the side of yes, we are definitely going to see the 12 to 18 months be the end of the bull market, which we are in right now, which would put it in line with what Mr. Wall Street is saying as well. He says the market makers took the chance to once again hunt the liquidity on the upside during the Federal Reserve meeting, with the Binance cartel sending Bitcoin to Wintermute, a market maker, and market pumped to $106,000, where he said he immediately called to short, and once again, we dumped heavily. We absolutely nailed this price action this week, outperforming all traders in the Twitter space. I agree, right? He was correct. And, I also am seeing a lot of this stuff about the Federal Reserve, like, oh, well, the Federal Reserve has to cut. It's like, no, they don't, and they haven't. So what makes you think that they're going to? Just because you need your bags pumped? They don't care about your bag. They don't even know who you are, right? So to think that, well, they have to cut rates. No, they don't. No, they don't. And when people say they have to, there's people who are counter trading them and saying these people are dumb. They don't know what they're talking about. So let's counter trade this. And this is exactly what Mr. Wall Street did, because the Federal Reserve gave no indication that they're going to cut rates. Absolutely none. And even if they cut by 0.25%, you think that's really going to move the market that much? It's not. It's going to be exit liquidity. We need to see massive drawdowns in the rates, which I don't think we're going to see until after Jerome Powell's term ends in May of next year. So Mr. Wall Street said, what's next? He said, well, many were doubting the sell everything and short calls, saying this was all FUD. He said, I told you exactly that this was not just fear-driven news like the tariffs. Since the Trump statement, the premium members on his channel, and he exited and shorted the markets aggressively. Some members already doubled their net portfolios by exiting positions and hedging alongside with the geopolitical event. The truth is that retail is fully trapped here. The market isn't even in fear. And it's true. We're not even in fear, and people are trapped, right? Because they bought at $100,000. They listened to Michael Saylor. Buy. Don't even look at the price. Just buy. And they're trapped. They are trapped. I've told my viewers, like, if you've been watching my channel for quite a while, your Bitcoin buy price and probably many other cryptos is much lower than where we are. So if we go from 120 to 110 to 100,000, there's still buffer room to sell and still be in massive profit. But if you bought at $90,000, you bought at $95,000, you bought at $98,000 or even $100,000 or more, you're trapped. There's nothing that you can do. You don't want to sell because you're going to be even. You don't want to sell because you think the price is going to go up, and you don't want to sell even though there's a high likelihood we're going to go down. So they're trapped. They can't do anything. And so he said, we need a candle that will result in a massive retail sell-off. I still have not seen that candle, so I will wait before entering back into any spot or long entry. The worst traders are those who ignore clear signs, many of them too greedy, too blind, never take profits in time. They let golden opportunities slip through their fingers, just like a man who doesn't know when to leave the table. Iran is going to respond. We know this. There's a lot of uncertainty there. He says that his first target range is $93,000 to $95,000, which is where the first liquidity pool stands. The second target is $82,000 to $84,000, where the big support stands and also corresponds with the EMA 50 weekly level, but the bull market golden line. So Yeah. Basically, he says long term, he's still very bullish on Bitcoin. But again, if you look at where the market is and you look at the geopolitical events that are taking place, the fact that the Congress said that they were going to pass the budget, they were going to raise the debt ceiling, they were going to the Federal Reserve was going to print. None of this has happened, and now we have a conflict that was brought into the mix. And what do conflicts mean? More money printing, but not just yet. Not just yet. And this is where a lot of people are pricing in, oh, well, the Federal Reserve is just going to come in, they're just going to cut rates. Well, even if they do cut rates, it's going to be like 0.25%. It's not really going to move the markets. We need to see significant reductions. They're not doing that yet. The Congress has not passed the bill. Maybe they won't even pass any clarity on crypto in the finalized bill, right? There's a lot of what ifs and a lot of hope. And typically that does not end well if it's not a guarantee, and we're not seeing the guarantee right now. And then we have MicroStrategy, and MicroStrategy just made a purchase, which was one of their lowest in quite a while. It looks like since March they had an $11 million purchase, and now they did a $26 million purchase. So this means possibly a few things. One is possibility is that they're just slowing down to see how the market takes it. Two, it could be because they're not able to sell any more debt, right, and raise more money through their debt instruments. Three, maybe they're realizing that we are at the top, right, because every purchase that they make, the dollar cost average continues to rise. And so there's risk here too, because as I've explained, what MicroStrategy needs to do here is they need to continue to purchase at these levels forever, because once they stop, there's going to be questions as to why they stopped, and that's going to cause fear in the market. And then the fact that there's not that inflow of new money coming in and buying up all that Bitcoin, that's also going to have an impact on the market as well. And so this slowdown doesn't make me even more confident, it actually makes me less confident, but it could also indicate that, they're just kind of slowing down to kind of wait and see what occurs. But listen, guys, there's still risk. And Jim Chanos was on Bloomberg, and I wanted you guys to actually see the whole interview. So I pulled up the whole interview so we can watch it together, at least the part where he talks about MicroStrategy, because I want you guys to understand, like, what he's saying here is so against the narrative of what MicroStrategy is doing from the Bitcoin strategy perspective. And then we have all of these other companies joining the mix right now. And they're all saying they're going to do the same thing that MicroStrategy is doing. But again, we're at all-time record highs. This is not a very good setup for a new company that wants to buy Bitcoin. And listen, we have a company like Anthony Pompliano is also starting a Bitcoin strategy company, and he's raising about $1 billion, I think. But we're at the end of the stages of the bull market. He may not start purchasing for another 6 months. So we may be rotating into the corrective phase or the drawdown or the bear market itself. And that may be a good opportunity to buy. So there may be some of these companies that are going to be late to the game, but that may be actually a good thing versus buying now at the top of the market. It's absolutely absurd. Anyway, let's listen to what Jim Chanos says when he's questioned about what MicroStrategy's play here is. And don't forget to give this video a free thumbs up. Also hit that subscribe button. And I'm going to give you guys some commentary as we're going through this part of the interview. Let's listen in.
Also blowing up on social media over the last couple of days due to your
And by the way, this is at 1.25 speed, so keep that in mind.
Call to go long Bitcoin and short MSTR strategy. Michael Saylor, the CEO of Strategy, spoke with us yesterday on Bloomberg Crypto. Here's what he told us about your trade.
Of course, we get an ad. Of course.
I don't think he understands what our business model is. We're actually the largest issuer of Bitcoin-backed credit instruments in the world. So last week, we just raised $1 billion by selling a preferred stock, non-cumulative, called Stride. That means we basically borrowed money that we never have to pay back, that we pay a dividend on, but we could suspend the dividend if we needed to. So Jim has been thinking that we somehow needed to sell the equity. So at the end of the day, if he's lucky enough to short the stock below 1x NAV, we're going to issue the preferreds, buy back the stock, and make money for our shareholders. If the stock trades at a weak premium, we're just going to sell the preferreds. And if the stock rallies up, he's going to get liquidated and wiped out. What he still doesn't understand is we're not a holding company or a closed-end trust. We're an operating company. So when we issue, trust can't leverage the Bitcoin. They can't issue preferred shares. They can't issue permanent shares of equity at a premium. We can.
Jim?
So before Jim Chanos responds, I want to respond to what Michael Saylor is saying. First of all, Michael Saylor has to continually defend how this all works. And they're adding layers and layers of complexity to it with Stride and Strike and Strife, and they're all different type of equity products and debt products, and they can also do stock buybacks, and they can give a dividend, but they can also take the dividend back. Guys, as I've explained on this channel, these debt products are not meant for retail, and the fact that retail is getting involved in these debt instruments, buying them and saying, well, I'm going to get 10% dividend. I'm just going to liquidate my whole portfolio. I'm going to sell my house, take the cash, put it into this debt product and get this 10% dividend for life, and not realizing the price of these debt products can go down, and that means the dividend goes down. They could stop paying the debt. You just heard it directly from Michael Saylor in his interview. And there's going to be a lot of people that are getting wrecked because you don't have to go to Apple and say, Apple, how do you guys make money? We know how they make money. With MicroStrategy, they say, well, we have to issue the debt, but the debt is non-cumulative. It has a dividend, but we don't really have to pay the dividend. So, what? Like, if you have to explain yourself at this level to one of the grandest short traders ever, Jim Chanos, right? For Michael Saylor to say, well, Jim Chanos doesn't understand MicroStrategy's, business model. No, I think that he does, and number one. And number two, they are a holding company, right? This whole, well, we're operating on Bitcoin. No, they're not doing anything with the Bitcoin. They're not leveraging it, unless this is part of the reason that they don't want to show us where their Bitcoin wallets, because they are rehypothecating the Bitcoin. We don't know this because they won't show us the wallets. Which is odd as well. So, for an investor who follows this space very closely and understands what happened during the FTX debacle with Terra Luna, Three Arrows Capital, all these other companies that went bankrupt, there are risks galore. And the MicroStrategy ecosystem refused to even think about this, but they're going to get wrecked. And like I said, when you see almost an absolute guarantee that there's going to be a reckoning, right? And again, MicroStrategy may have no issues in a downturn because the way that they structured all these products. But you as an investor could keep that in mind. Let's continue listening in.
Yes, I always love it when management say, well, he just doesn't understand our business.
Bingo.
Michael Saylor is a wonderful salesman, but that's what he is. He's a salesman. And what he's selling investors is the concept that you give me your money and I'm just going to go buy Bitcoin. And hopefully the value of my stock trades at a premium to the value of that Bitcoin. And so as long as I can keep doing that, I generate value. And
Bingo.
This is, of course, I called it financial gibberish because on top of that, he also said in your interview, he said, the company should not just be valued on the basis of the Bitcoin holdings, but on a multiple of the profits that accrue from when I do this financial alchemy. And I pointed out on social media, I said, well, that's akin to saying, well, my house that rose in value from $450,000 to $500,000 last year is not worth $500,000. It's worth $1.5 million because it's worth the $500,000 plus a 20 multiple on the $50,000 increase. And of course, that's absurd. But that's the claim he's making. On top of that,
and this is 100% true, right? MicroStrategy is trading at a premium, and all these products currently are trading at a premium, but we are in a bull market. Even though there's a lot of people who think that we're not in a bull market, we are in a bull market. And in a bear market, all of this is going to come to a screeching halt. You don't want to be in these products when it comes to a screeching halt. You want to be on the opposite side or just completely neutral. Because there's a lot of people who say, but Cryptoviser, what if it goes higher? Yeah, it can go higher, but this is where risk-reward, analysis comes into play, right? I mean, you could literally just hold cash, and your cash can go up in value. But based on historical data, your cash is going to go down in value substantially if you just hold cash and don't hold any assets. And so you have to understand, like, the MicroStrategy bulls, which may just be bots, okay, bulls may be bots, they don't even understand for their own thesis that they should just be buying the Bitcoin because that's what MicroStrategy is doing. That's what Michael Saylor is doing. He's telling you the Bitcoin is the premier asset, not the MicroStrategy. People don't want to hear it. And the fact that they're even having this conversation on Bloomberg with a short seller is, it tells you where we are, that their side is so convinced that MicroStrategy cannot come down, even though it's at a 100% premium, basically. So that means a 50% drop is almost baked in. And you have Jim Chanos here saying, this is just gibberish. And it is. If you have to convince me why your product is not a risk, well, it's a risk, right? I should be able to see clearly how it's not a risk. But all I see is risk. Let's continue listening in.
He's basically now saying that well, I'll sell preferred, not common, to dilute the shareholders and compress the premium. And let me just interject really importantly here. I'm actually doing what he is advocating, right? I am selling MicroStrategy securities to buy Bitcoin. Let's be clear, it's a hedge trade. I don't know where Bitcoin is going to go.
And it doesn't matter to you, actually.
Well, it doesn't matter. The premium compressing matters to me. And
this is 100% correct. Let's get through this ad.
It's important to understand that in 2024 and 2025, mostly at the end of 24 and 25, MicroStrategy has sold $35 billion roughly of securities, $33 billion in common and convertible into common, and $2 billion in preferred, most recently. The market for the preferred stock that he's selling is tiny relative to common. Let's be clear about that. And in his own words that you just played back, he makes a case that you have to be crazy to buy these preferreds, right? He's going to pay you a dividend, maybe. It's not redeemable. It's perpetual. And if I don't pay the dividends, they're not cumulative. I don't have to pay the back dividends. So, who in their right mind institutionally would buy these preferreds?
That's my question. Do you think there's always going to be buyers for these preferreds,
No.
especially if Bitcoin starts to trend lower or go materially lower?
And again, he said, well, if the stock trades below a 1 M multiple to MNAV, we call it, Chanos, I'll just buy back my common. I can assure you, if it trades below 1, I will have covered my short.
Is there a catalyst, though, or a certain set of conditions that would drive the premium down to collapse?
The catalyst is Michael Saylor. He's been selling equity to himself compress the NAV. And I would point out, I posted something just yesterday as well, that for all of this, the premium to NAV that MicroStrategy has averaged has been right around the levels we are today, about 1.8. We put this trade on and advise clients somewhere between 2.2 and 2.3. But it's traded at 1, and it's traded as high as 3.5.
Where do you think it should be? It
should be at 1. I mean, I just think because for all the advantages he claims, you have what we call agency risk in finance. You have the fact that he could do something to the detriment of shareholders, and of course, we're not calculating any deferred taxes in our NAV, which theoretically there would be if he sold Bitcoin.
So the other argument that people
now. We are approaching a very critical time period for MicroStrategy, okay? Very critical, because from my understanding, MicroStrategy is trying to get inclusion on in one of the stock indices, and they need a certain number of quarters of positive on-the-books growth or profit or some metric. And so this quarter that we are ending, in June, and then in July, end of July, MicroStrategy is going to be giving their earnings report. And so that report is going to be very, very important. And so how MicroStrategy closes the quarter, closes June, is going to be very, very critical. And so there's a lot of counter trading on this so that they don't make these numbers, right? And whether they do or don't, I don't know. But this is really the critical point. And I don't know that the market is going to be able to support this with the geopolitical conflict, with the Federal Reserve not doing much, with Congress kind of taking their time with essentially printing more money. It's all culminating, right? All at one point. And this kind of brings us to the fact that we are probably towards the end of the cycle. And even if we're not towards the end of the cycle, there's definitely elevated risk. And we know this from the fear and greed index. We're seeing a lot more movement back and forth on this. It's not a kind of a steady, gradual, slow. It's just last week we're in extreme greed. This week we're already closer to extreme fear. And these things rotate back and forth very quick. But we're also at the part of the cycle where everybody is trying to convince you how this is going to keep working, right? The market already priced in what MicroStrategy is doing. The market already knows, and this is now the baseline. And so they have to keep doing this. And once they stop doing it, The market is going much, much, much lower. But this is a great opportunity, because we are seeing now whales are moving into altcoins, right? Ethereum is falling harder than Bitcoin in the recent little drop, and whales are buying up on the way down. Listen, there's a lot of movement in the price. We have seen that there's a high correlation, right? You can see Bitcoin on the 7-day is down 5%, Ethereum is down 14%. That's significant. XRP down 12%. Now we're starting to see the volatility pick up. And the closer we are to the end of the market, right? The end of the market culminates in the most volatility to the upside and to the downside. You'll get major wicks up and then major wicks down. And so when we start to see the volatility, the moves, double digits up, double digits down across the board, this is great opportunity to play these trades and to look for better entry points, especially if we are going to have an alt season. Because if we are going to have an alt season, then we're probably going to see a rotation into the alts, and you want to be in those before they actually move to the upside. The other thing that we have talked about is the idea that maybe there isn't going to be an alt season. Maybe the alt season is in the stock market, which is totally true. I mean, just look at Circle Finance, right? The stablecoin issuer. They went from a $30 IPO price, and now it's 10x that, $300 we are approaching. And currently we're basically on par with USDC's issued market cap, right? So the market cap on CoinMarketCap is how much USDC, how many digital dollars they've issued. And so their market cap is in line with that now. Are they worth $60 billion because they have $60 billion under management? I don't know the answer to that question. I mean, if you look at JP Morgan's like half a $1 trillion market cap. And I would imagine they probably have trillions and trillions of dollars on their books. So the answer is probably no. It is probably overvalued. And so the same thing that we're seeing in MicroStrategy, right? The premium, the expensive value compared to the underlying Bitcoin and the debt. Circle, we're in the same kind of situation, right? What is Circle actually making from a dollar perspective? What is their growth potential? Is this overvalued at this point? I do think we are at the point where people are there are still going to be those bullish people. And you have to keep in mind, they're the noise, right? We don't even know if they're human beings. They may actually just be bots. And so the more risk that we are seeing and observing in the market, like we've been talking about all video and really the last couple of weeks on this channel, the more that we're seeing and the more bullish people are, just ignore those bulls, because those bulls are distraction, they're noise, right? We need to stay focused on the fundamentals, because everybody's all bullish on Circle, but the smart money like Jim Chanos, they're looking and saying, wait, this looks like, yes, at the beginning, there was a lot of hype, a lot of excitement. We didn't know what exactly, stablecoin's valuation was going to be. But now we're getting to the point where they're probably on the overvalued side. MicroStrategy, same situation. And the bulls, they can't even understand. They're like, what do you mean, Jim Chanos, you're shorting MicroStrategy? How could you do that? And he's like, well, I'm doing exactly what Michael Saylor is doing. He's selling shares of the stock and buying Bitcoin with it. So that's what Jim Chanos is doing. He's selling shares by selling short, and then taking the proceeds and buying Bitcoin. I mean, I think both of those trades, generally speaking, are risk, because if Bitcoin goes down, MicroStrategy goes down as well. Is it going to offset, his hedged play? I don't know. We'll have to wait and see. I'm sure it probably will. He's a smart guy. But this brings us into, where this whole stablecoin thing is going. And there's probably going to be a lot more, right? We're going to potentially have a Tether IPO in the future, potentially have some more stable coins popping up with the banks and things like that. But we want to also understand what else is going on in crypto, because there's a lot of building going on. And if we are rotating into a bear market, or we're towards the end stages of the bull market, we need to understand where we need to position our portfolios in the bear market and prepare. Because again, there is some categories of crypto that may still correlate with what happens in the stock market, right? The whole AI narrative, Hedera, Internet Computer, BitTensor, Near Protocol, Fetch AI or artificial superintelligence. these will probably do well if OpenAI goes public, if OpenAI or other AI companies start to pick up, the AI investment narrative again. And it will happen. Like, people are going to get bored of this Bitcoin play, which they already are. They're already saying, well, I've already made my money on this. Now it's time to short or get into other assets. And so we're seeing that happen. Circle, all these Bitcoin treasury companies. But it's getting to the point where it seems like it's a little bit of IPO mania. And so when you get into that point, that is the euphoria in the market. That is the top signals of the market. And listen, there's a lot of people that watch my videos that say, Cryptoviser, we're still gonna pump towards the end of the year because there's all these positive things that are coming, that we think are coming at least. And maybe we will pump it towards the end of the year. But again, you wanna be positioned on the other end. You don't wanna be positioned for what ifs, right? In a bear market, we know eventually we're gonna have a bull market. Now we're in a bull market and we know there's gonna be a bear market. So you wanna prepare for that. You don't wanna chase the FOMO, which a lot of people are doing. That brings us to Hedera and the Hedera stablecoin studio. Now, just a few weeks ago, I released a video on the Hedera stablecoin studio, and they also have an AI studio. Well, now we're hearing that Hedera was chosen for the Australian digital dollar launching on Hedera. So Hedera Foundation posted this. In June, we're excited to announce that AUDD, the Australian digital dollar stablecoin, has officially launched on Hedera's network. Through this integration, we look forward to driving digital payments through the APAC and beyond. They continue saying, leveraging the stablecoin studio, this Australian digital dollar on Hedera benefits from the network's enterprise-grade performance, including transaction finality in seconds, predictable fees of 1/10 of a penny per transfer, and a carbon negative footprint. They said through this integration, we look forward to driving digital money forward in APAC, this Asian Pacific region, and beyond through real world financial use cases on Hedera, from cross-border or micropayments to digital marketplaces and green asset flows. And so there is still a lot of very positive and very, global things that are going on. But keep in mind, these things are going to take time to gain traction, to get implemented and integrated into traditional financial ecosystems. Like, we're seeing the banks starting to get involved in stable coins now and crypto, and people are getting really excited about this. But, the banks, they move very slow. And these digital dollars and integration of digital dollars, it's going to take some time. And so are people getting ahead of themselves with the stablecoin thing? Like, is a stablecoin really 10 times the value of the IPO? Probably not, but there's a 6-month lockup on those shares from early investors and the team. So they can't unlock those shares until towards the end of 2025. And so that could potentially mark a major drawdown towards the end of the year. Once those shares unlock, if we're still at these elevated levels, anything above $30, they're in profit. And if we're at $300, they 10x'd what their IPO investment was. And so they're going to sell when those shares get unlocked. 100% they're going to sell. Maybe not all of them, but a large quantity, and that will push the price down. So what is the market probably going to do? The market is probably going to do what Jim Chanos is doing, shorting it before that 6-month lockup comes, so that the market will front run those insiders and potentially push this price back down to $30. I don't know that that's going to happen, but it's definitely something to think about and keep in mind. Now, in terms of Hedera and their implementation of this, again, this is just more usage on the back end for these networks. That's really what we want to see. We don't want them just launching these coins. We want these coins launching, but also being used, because this will then increase the usage of the network, increase the transaction volume of these networks, increase the validator, and also really the demand for these networks, and showing that they can process micropayments and all of these other stablecoin type payments. And we're also hearing Texas joins the growing list of U.S. states with Bitcoin reserves. They became the third U.S. state to approve a Bitcoin public reserve with a new legislation allowing direct crypto purchases, and the governor has already signed this into law. But keep in mind, a lot of people are saying, but the Cryptoviser, this is very bullish. Yeah, it's bullish, but this was already priced in, right? We knew that this was going through their legislation. We know that it's going through other states' legislation also. It's the same thing like when a company says, well, we're going to start buying Bitcoin and doing what MicroStrategy does. It doesn't really move the price of the market anymore because this is the baseline, guys. This is what people are expecting from the market moving forward. It's no longer like, wow, another company's doing what MicroStrategy is doing. It's becoming more of, wait, there's going to be more risk in the market, more Bitcoin purchased with debt that these companies can't afford to lose. They can't afford to repay. You know, these are things that we have to think about, especially because we are investors. Now, if you have a long time horizon, yeah, Bitcoin's going to go much higher throughout the course of time. But if we're understanding, you know, locking in profits, getting in better positions, you know, in my view, Bitcoin is going much lower, like under probably $50,000, because we just went down to 98,000. We came down $4,000, and we're already moving to peak fear, right? The market has barely dropped, and people are buying back in. And so what I see happening here is as the price dropped, right? Even in the recent drop, you have a drop and then people say, buy the dip, buy the dip, buy the dip. And then they buy the dip and it goes back higher. But it doesn't get to the previous high, right? And I'm looking at the 1 month chart. You can see we hit 109,000, then we came down to basically 100,000, and then we went back up, but we only went to slightly below where we were before, 110, 400. This was 110, 200, and then went back down, and then further down. And so there are a lot of dip buyers at this point, and they are going to keep the price fluctuating above and below certain psychological levels. I think the psychological level right now is 100,000. We'll probably like go to 95,000, go back above 100, go down to 92, go back above 100. But I think there's going to be a day where we go under 100, under 90, and we stay there for a little bit. And that is when peak fear is going to hit and potentially push us even lower. As I said in previous cycles, like we don't know when we're going to be at the top. We don't know when we're going to be at the bottom until afterwards. But you can look for the signals. Like peak fear is not the price coming down $4,000. Like if people thought $98,000 was peak fear, Pentoshi thought this was the good time to buy, it starts scaling in. He's not. He's just holding the price up a little bit, right? Because there's a lot of people selling, guys. A lot of people selling. And, you know, that's what I think is happening. And so there will be probably peak fear before we go to $50,000, but people are just going to keep buying. And like one of these posts, Mr. Wall Street said, the bulls are trapped because they're going to keep buying these little dips here, and then we're going to keep dipping. And they're going to say, oh, no, buy the dip, buy the dip, buy the dip, buy the dip. It's like, buy the dip. We went from 110,000 to 98,000. That's a 10% drop in the price. It's not that big of a move. If I see like a 40% drop in a day, yeah, I'm going to buy that dip immediately, most likely. But a 10% dip, I'm not buying that because I want to see where the support is. And you can see double top. And there's more strength in the red than there is in the green. And that is a clear indication that things are not looking too hot here. Even if we pull this back to the beginning of the year, you can see we hit the top, we dropped back down. Everybody kept saying, buy the dip, buy this dip, buy this dip. We're going higher. We didn't. We stayed at that level and then came down further. And everybody just kept trying to buy the dip to push the market back higher. But the macro factors didn't allow that to occur. And so everything that we're seeing, all this euphoria in stable coin issuers, this is an indication that we are, you know, towards the end of the cycle. This is very bullish, right? That Circle went public. It's very bullish that the Australian digital dollar went on Hedera. It's very bullish that Texas, added a Bitcoin reserve. But all these things were priced in already. We knew that there was going to be expansion of stable coins. We knew that there was going to be an expansion at the state level of these Bitcoin reserves. And the market already priced these things in. And so just saying, well, it's confirmed now, you want the price to go even higher? That's not how the market works. Buy the rumor, sell the news. The rumor was we were going to have all these states doing Bitcoin reserves. Well, here's the news. You buy the rumor, you sell the news. This is the news. The rumor was that MicroStrategy is the best possible investment and that there's no risk. Well, the news is that there is risk, and that big traders like Jim Chanos and his investors that go to him for advice, they're looking to short this market, right? Buy the rumor, MicroStrategy is the best play on the planet, but the news is no, it's not, right? No, it's not. In a bull market, it is. Now, we're kind of at the stages where everybody bought into it, and now people are like, wait a minute, they don't have to pay the dividend? Wait a minute, I may not get the dividend? Wait a minute, I just sold my house to put all the money from the house into this debt product for MicroStrategy, and you're telling me that it's not the best investment? You're telling me big hedge fund managers like Jim Chanos are shorting what I purchased with the money that I used for selling my house? That is where peak fear starts to creep in. And if the price is dropping at the same time, a lot of people are going to get wiped out because they're not pulling in profits, right? And so a lot of people are also looking at older metrics. They're looking at DeFi, which is still very important, but there hasn't been much changes in DeFi, right? And we are seeing DeFi continuing to dominate the world. As TradFi is kind of testing DeFi now. They're testing smart contracts. They're potentially using them on the back end. There's going to probably be integrations with stable coins and maybe even bank stable coins. But here's the deal, guys, right? This is going to take time. And the bull market has blessed a lot of us with, very good gains. But it's important that you lock in those gains, and not only lock in those gains, but understand the risk. And so for me, yes, we don't talk about my portfolio on this channel. There are still some altcoins that I think are going to perform, but I'm cautiously optimistic about that. Generally speaking, I am more bearish on the scale than bullish, but I still think that there's a potential for final pumps in the market, especially with all the volatility that we've been talking about. But these volatility pumps, I want you guys to remember, just look at the Bitcoin price, okay? The volatility pumps are not necessarily going to move the market the way that people expect it to do. I mean, just in the last month, we went to 110,000, boom, straight back down. Went to 110 again, boom, straight back down. And both times, we had lower highs and also lower lows. And so I don't know how anybody can look at these charts, look at all the information that we're talking about, look at all the risk, look at all the debt, and the fact that more companies are doing this at the top of the market tells me there's a lot more risk than people are anticipating, including some of the whales like Pentoshi buying 25 Bitcoin at all-time record highs. Right? You may say, well, Cryptoviser, 112,000 is all-time record high. This is the difference between having $1.12 in your pocket and 98 cents in your pocket. Is there really that big of a difference? No. Either you can buy the stick of gum or you can't. You can buy the bottle of water or you can't. 98 cents or $1.12. It's not that big of a difference. That's the same thing that we're seeing here. And the fact that we're having the Jim Chanoses of the world shorting and doing what MicroStrategy is doing, and the MicroStrategy ecosystem is, or maybe they're bots, are cannot even handle it. No, Cryptoviser. Jim Chanos is wrong. And it's like, do you really think that he is wrong, or he's doing the same exact thing MicroStrategy is doing and Michael Saylor's doing? For me, one of the biggest indicators that we were at the top of the market was just a few months ago, before I even called the top of the market, I told my viewers that Michael Saylor sold all of his shares of MicroStrategy stock. Well, at the time that I said that, I didn't realize that he just converted 20 million shares from whatever his pay package looks like. He converted those to actual shares. So he had 20 million shares when I said that. And people were saying, Cryptoviser, he owns 20 million shares. He's one of the largest holders of MicroStrategy. And I said, no, he sold his shares. People were saying, no, he didn't. So I went and looked, and I'm like, no, he did sell his shares from 2023 into 2024, and then he just got more shares. And what do you think he's going to do with those? He's going to sell the shares. All of the executives at MicroStrategy are doing this because they're selling the shares and they're buying Bitcoin. They're doing the same thing that MicroStrategy is doing. Jim Chanos doing the same thing that MicroStrategy is doing. And the MicroStrategy fans, these bulls, they cannot even see it. They're like, no, Jim Chanos is shorting. How dare he short MicroStrategy stock? Meanwhile, that's exactly what MicroStrategy is doing because they don't care about the stock price in the short term. They care about the Bitcoin and the power they're going to have by being the largest holder of Bitcoin, potentially in the world outside of Satoshi's wallet, or maybe they're going to have more than Satoshi's wallet. But there's risk. And for me, the risk is more elevated than the reward. And so the likelihood we're going to go to $200,000 is not worth the risk of going to $50,000. Because if we go to $50,000, we're not going to $200,000 until the next cycle. But if we go to $200,000, we're still going to hit $50,000 after that. 75% drop, going from $200,000 to $50,000. So that's kind of my viewpoint on this. I'm kind of with Jim Chanos. I don't necessarily know everyday person shorting MicroStrategy is the right play either, because again, with this volatility, we could see the price of Bitcoin go up to 150,000. We could see the MicroStrategy price go up. But I remind you, as high as we are going to go in these, in my analysis, and obviously a lot of you guys agree with this because you're still watching these videos, right? Is that we're more likely to hit 50,000 than we are to 200,000, right? We're only $50,000 away from 50,000. We're $100,000 away from 200,000. In the most bullish market that we've seen in a while, with tens or hundreds of billions of dollars from Wall Street entering the space and people saying, no, Cryptoviser, Wall Street money is not the exit liquidity. It's going to be retail, people like me and you. Investing $100, a month. Yeah, that's going to be way more than what Wall Street is putting into the market. Please. Wall Street was the exit liquidity. And a lot of people, time is running out because the exit liquidity is going to dry up. And it has nothing to do with where Bitcoin is or where Bitcoin is going or the bullishness of this whole market, generally speaking. It has to do with now Bitcoin is connected and is part of the traditional financial system. And so if TradFi starts dropping based on the geopolitical conflicts, crypto is going to follow. Anyway, hopefully you guys enjoyed today's video. Don't forget to give the video a thumbs up. Let me know your thoughts down below in the comments. Hit the subscribe button. Good luck in the markets. Nothing I say is financial advice. Do your own research. These are just my opinions and analysis. This information may not be up to date, and it could also be wrong. So do your own research. I'll see you guys in the next video. Crypto on.